Hello all, Tony here. US stock markets finished higher on Friday, buoyed by growing confidence that the Fed will cut rates at its meeting next week. While all three indices ended the week positively, November's overall performance was mixed. We saw the S&P and the Dow Jones post monthly gains, but the Nasdaq snapped a 7-month winning streak, falling by 1.64% in November. Now, this was largely due to a 12.5% fall in index heavyweight Nvidia as investors switched out of it and into Alphabet. Looking ahead, this week will feature the release of September's core PCE inflation, personal income, and spending figures, as well as November's ISM PMIs. We'll be monitoring the ISM services PMI very closely, given that services account for approximately 70% of US GDP and the insights its sub-indice provides into the current state of the US labor market. Let's take a look at the charts of the Nasdaq and S&P to see how they stand as we start this new week. Okay, this chart is the daily chart of the Nasdaq. It captures the rally from the April's lows up until the October 26,182 high. And in recent videos, we've highlighted the importance of medium-term support coming in around 24,000 to 24,200. And what you can see last Friday week was a break below there, and then it's managed to close above there. And when we were doing the video for last week, this time last week, we spoke about the idea that we're uncertain whether this was going to be a precursor to a break lower or a rebound. And of course, last week we did get that rebound. So what this did do, to my mind, was it was a false break lower, and it's now set the platform for what I'm calling as the end of the correction from the October lows. You'll notice that I have relabeled the Elliott wave count. So we've still got our wave 1, our wave 2, and I'm now calling this the pullback from wave 3, which by definition is wave 4. And after wave 4, we should see a retest of the high. So I'm looking for a retest of this 26,182 high at a minimum. But we do need to keep in mind, we're now entering a very seasonally bullish time of the year. So my expectation is that while we hold above this support coming in around 24,000, 20,800, if you like, that we can push up towards 27,000, maybe a little bit higher. So this is shaping up once again as the key level for us to watch. While above here, we are going to hold a bullish bias, looking for a push towards 27,000. For the S&P, a similar story. Now, we were talking about the importance of this horizontal support coming in around 65.50. We got this little false break lower 2 Fridays ago, and it closed back above 65.50. We noted in the video, we didn't know whether it was just a precursor to a drive lower or a rebound. Now, we've seen rebounds from 65.50 quite a few times here, from here, and from here, and we've seen it once again. And as I mentioned, we're coming into a seasonally bullish time of the year. So my preferred strategy is that we are going to hold a bullish bias, providing the S&P holds above support at 65.50 to 65.20ish. And I would be looking for a push up towards 7,000. We scope up towards 7,200 in the new year. But just keep in mind, these views, which are bullish at this point of time, are going to be maintained, providing that we hold above these important support levels we can see here in the S&P and, of course, in the Nasdaq, which we just looked at a few moments ago. That's all for this update. Stay tuned for more ahead.